I'm Arielle Evan, and I lead the Scale-Up program at Climate First, and I'm joined by two very talented founders here with me, Gonen from Exodigo and Moshiel Biton from Addionics. We're here today to discuss hyperscaling Energytech companies and speak to the founders that raised growth rounds in 2024 and survived to tell us about it. Of course, it's a challenging year, and so we're very excited to hear from your insights. I'll start by saying congrats to both of you for reaching this impressive milestone. And let's start with some brief introductions. Tell us a little bit about yourself and about the companies that you lead. Moshiel, you can go ahead.
Hey everyone, thanks for the opportunity. Thanks for having me. Moshiel, CEO of Addionics, a startup in the battery EV space. We're developing smart 3D current collectors. It's a component that overlook in the battery domain, and we are reinventing the architecture of this component. We are reducing the cost and improving the performance of batteries, almost working with all the biggest automotive OEM in the world and also battery manufacturers. And yes, we recently closed our B round, and still I would say in the deferred closing of the round, in total we raised more than $80 million. And looking forward to the vibrant panel discussion.
Thanks. I'm Gonen. I'm the CTO and one of the co-founders of Exodigo. Exodigo is a company that deals with underground mapping, non-intrusive one, meaning we aim to provide accurate maps of the underground, specifically right now underground utilities to our clients in a non-intrusive manner, meaning we don't penetrate the ground. And about the company, we have just raised 3 months ago our A round of more than $100 million, bringing the total funding of the company to $118 million. And we are more than 200 employees globally, mostly in Israel, in the US, Europe, UK. That's all.
Amazing, super impressive. So I want to dive right into the subject and the topic of raising growth rounds in 2024. So both of you raised significant amounts of capital during this year that's marked by tough macroeconomic environment, and of course internally we're experiencing some significant challenges. In addition to that, companies like yourselves are experiencing a funding gap due to the significant amounts of capital needed to raise at an early stage where there's still engineering and some scientific risks, which leaves you in a challenging position, falling between the cracks of venture capital funding and private equity funding. So Ido, I'd like to actually start with you and hear a little bit about what were the main drivers and the milestones that you reached with Exodigo that enabled this fundraising successfully.
Talking about the A round, right? So I think that basically sales, right? Like you have to find a problem that is a real pain in the world, and believe me, the undergrounding problem is a real pain in the world, especially in construction, engineering, utilities, transportation. When you want to deliver capital projects, sometimes, very often, you get into delays that are associated with underground risks and underground uncertainty. And when the clients understand better than us the pains that are associated with underground risks, it's very easy to sell. So basically, we sell to B2G and B2B2G. We do pilot, we show them, we do blind tests all the time for our clients. And when they see that we can deliver, they, of course, continue with more procurement. And I think that that's what led to our A round. Does that answer the question?
Yeah, definitely. Of course, solving a very real and big pain, and obviously showcasing the ability to execute.
I think that you asked about the funding and bridging the gap of intensive R&D and how do we fund the company, or how do we raise the fund from the VC world compared to the private equity one. So I guess that our seed round was also quite unique for first timers in Israel. It was more than $10 million at the time. And I guess that you have to have some kind of an unfair advantage in order to deliver, and for the VCs to understand that you can deliver in a specific industry that you operate in. And for the A round, which was massive compared to our industry, it's just that we are a deep tech company and we are a fully integrated company in the sense that we have our own R&D investments, which are massive. Dozens of engineering within our company are dealing with the underground imaging. And we also deliver the services currently that provide the actual scanning of the surveyed areas and bringing the data back home. So we have to have this kind of funding in order to deliver. And this year we are about delivering, and I guess that this is how we bridge this gap. So.
Amazing, thank you. Moshiel, I'd like to ask you the same question. Can you relate to the things that Ido said, and what do you think were really the main milestones that enabled your successful fundraising recently?
So first, it's never easy to fundraise. So never easy, not during this year, and not was easy before. Of course, this year is more challenging with lots of uncertainty that is happening in Israel, but also around the world in the market domain. I think the most important stuff is to always communicate with the market. If it's the investors or the customers, in our latest round, like a CVC, one of our clients co-lead the round with a financial investor, and to ask them and always to get the answer from them, what they would like to see, what are the milestones they would like to see, and then to work backwards from those milestones. And what we did, and we did it from the beginning, we talked with the customers, with the market, from day one, literally from day one, speaking with the market, understanding what they want to see, and what are the milestones or what are the achievements that they will going to see in order to invest. And we took those milestones and actually turned them down into a roadmap to the company. So that's the way for us to first engage with the clients and also to get their, I would say, commitment to work with us and also to invest. In our, I would say, situation, it was mandatory. It was very difficult to fund a company without strategic companies that understand the value. It's not only financial return, but also strategic return. And the combination with clients that can reduce the risk for investors, that combination was the path for completing the round.
Mm-hmm. Amazing. I'd like to move on and discuss the capital stack. So many climate tech and energy tech companies have a diverse capital stack to support the intensive capital needed for building the company successfully. This may include of course, equity and VC funding, but also project finance, debt, non-dilutive grants, and more. So I'd like to ask you, Moshiel, how you plan the capital stack for Addionics in order to support the needs of the company.
So yeah, we are a unique company, especially in Israel, where we do manufacturing. It's not like, I would say, standard. Most of the companies in Israel are mostly doing SaaS, cyber, etc. And we needed to deal with manufacturing, CapEx, supply chain issues that it's not very typical in Israel. And for us, it was important to first plan ahead the manufacturing plan according, again, to customer request. And we always took some risk. So we built capacity that we didn't have the customers before having the capacity. But building that and meaning for that, we've managed to lock some of strategic clients to buy this capacity. In our domain, it's like the chicken and egg. It's very difficult to get offtake agreements before showing the manufacturing capability. So you need to find those bridges and different type of finance opportunities. There are many grants, especially today with all the Inflation Reduction Act. Probably you heard the Department of Energy that discuss about manufacturing in the US, all the decoupling from China. it's creating opportunities. And I believe for us as entrepreneurs, founders in the domain, we need first to map all the opportunities and to be able to capture those ones that will be suitable for us. So we expand our team in the US. We have a very strong team and management in the US. I'm there quite often to find the right sites, the right partners, the right grants in order to scale up and to meet the demand that we are facing right now. So that's one option. Another option, which of course always is to get, dilutive money. And sometimes dilutive money is the most, I would say, cheap money. Even like everyone think like it's expensive. I can tell you that sometimes those grants are lots of bureaucracy, things that actually can slow down startups. So especially if you want to build something big, so dilution, it's not something that you should only take care of. You need to find the balance, and it's okay, especially if you're aiming big. It's a marathon, and it's fine to get this dilutive money, especially if you are in I would say, deep tech, hardware, manufacturing world.
Definitely. I will say that I think because of the unique nature of climate tech and energy tech companies, you do have other opportunities to enable your growth apart from dilutive funding, of course, and you're leveraging it very nicely. I'd like to talk a bit about investor profiles. So investors' profiles significantly influence the financing round and the post-round dynamics. They vary in geography. For example, in the US, investors, compared to Israeli investors, are looking for bigger risk, higher valuations, and are expecting higher multiples. Of course, venture capital also varies in terms of if it's a classic VC, corporate VCs. So I'd like to ask you some of your insights from the recent round and some of the differences between the different investor profiles and why you decided to proceed with the investors that you proceeded with.
Okay, so I think that we approached this growth round quite early, after 2 years after the inception of the company. And considering that, we obviously we just closed, or it wasn't even the closing of the first year of our sale. We launched the product around early 2023, and this was the first year that we ever sold anything. I think so, if I'm not mistaken. So obviously for the Americans who are more focused on growth rounds, they are highly focused on multiples, and they want to see the multiples work out, while the Israelis, they take more risks. As far as my feeling, they take more risk. They understand your vision and where your company is heading, and they are willing to accelerate the growth round, in that sense that they are not waiting for the inflection point that is oriented by multiples or originated from the multiples. I think that was a successful decision for them, because this year we are about to break our expectations with sales. But this is the nature of the business, and if you want to go to the US and you want to raise over there, you have to be ready with respect to the earnings and growth ratios.
Mm-hmm. So many people on the stage discussed the impact of the war and the challenges that we're experiencing in Israel. About 15 to 20% of tech workers were drafted for reserves within the first month of the war. So I'd like to hear from both of you, starting with Moshiel, how this impacted the company, and how did you kind of work with these challenges and continue to proceed and grow?
First, I think everyone's still in trauma from like October 7. It's not something that we've managed to overcome or relieve as a society. We're, of course, resilient, and everyone is saying that no matter what and delivering, but still we're trying to recover from that event. It wasn't easy. I cannot tell you that it was easy to deal with many workers that serving in the reserve army, but we found that for us, our role in this situation is to support the workers that are coming to work every day and the ones are at the reserve and their families. And in very, I would say, weird or unusual, what we found that everyone that was staying at work was actually much more effective. And at the beginning, everyone actually worked very hard in order to make sure that his colleagues or their colleagues that are in the army, they will have a place to come back and to work for. And that was the message, like if you are not now fighting, no matter where, you are fighting here. It's also a war, maybe without weapons, without like any tanks, but we are in a war and we need to survive, and that was the mode. And we've managed to go through that with people making much more, 300%, and working hard in order to deliver. And later on, especially as I mentioned, it's not only the reserve, we are in the manufacturing space. We have supply chain coming from Asia with all the hoods that, delays, more expensive shipments. We actually felt that from day one. We are building facility, so all the build of the facility is like 30%, 40% more expensive. There are no workers. So yes, we've been able to overcome that. We're also lucky, but it was challenging. It's still challenging. I think the message is in that situation, when you deliver, when you have technology that clients they want to do business. And at the end of the day, if you have good technology, they will continue to do business. Always they will consider the risk of being here, which we cannot ignore that. But we should always try to show that the risk is minimal.
Yeah, I think the resilience coming from Israeli tech companies is really truly amazing, and it's across the board we're seeing this. Ido, can you share a bit about how this impacted Exodigo in the past months?
Sure. So I think that on October, around, you said 15 to 20%. I think that around 70% of our company was called for reserve duty, including the two co-founders, myself and Jeremy, who's the CEO of the company. I served in 8200, so I spent around a month, and Jeremy in a combat unit for around 2 to 3 months. And I think that what happened in the company is that the people who remained and stayed at work that weren't called for duty, we have consolidated and focused on our core and main product, and we tried to deliver the features needed in this core product. We kind of put on hold and freeze all the other efforts that we had at the time. And actually, after October 7th, we had our inflection point in sales, meaning after the trauma that we all suffered, we actually had the sales needed to trigger the round that was triggered around December. So I think I couldn't agree more with Moshiel here about the people who remained at work, kept this machine working, and actually, they saved the work for the other 200 employees that were called for duty. So I guess that means a lot.
Thank you for sharing. I'd like to ask both of you of one key learning that you'd like to share from the latest funding round, and maybe some advice you can give to the entrepreneurs that are sitting here in the room.
Yeah, so one advice, it's difficult. There are many learnings and things that we can share. Always, it's important to, of course, believe and to keep ongoing and resilient, as mentioned, and not to quit or to give up. And at the end of the day, you need to remember, and everyone needs to remember that in the investment, it's like, dating. You want to marry, hopefully, with one lady. And also with investors, when you are raising round, you need the first lead to say yes. So no matter how many no's you're going to get, like keep going. We receive so many no's, it's insane. I can write a book about how many people kicked me out to the room, told me that I'm crazy and what I'm talking about, and it was a nightmare. But as you know, as mentioned before about the war, about dealing with this situation, we need to build this, I would say, ability to keep going. Always I'm saying that, like, I can be on stage in the camera or to a bima because I always need to act. No matter what happened, I need to sell all the time, to sell to investors, to clients, to employees, to new investors. So this is another, I would say, tip. Try always to be as the, I would say, to deliver the image that you want the other side to see. Doesn't matter if it's not new or you have a bad day. Doesn't matter. You need to keep going and tell the story and believe in the story all the time. And that's what actually, at the end, will give you the success.
Thanks, Ido. Go ahead.
So my 2 cents for the tips is I always say that we found a real problem and a real pain in the world, and the climate effects and the clean energy and all the other stuff are secondary to the fact that we have found a real pain in the world, that when you solve it, you do good. So that's my tip. If you want to focus on and when you start a startup, choose a thing that is a real pain and it has economical value for the client besides the other values that might come along. And the second thing is that Moshiel just said, sell to everyone, sell to clients, sell to investors, sell to employees. So I'm double clicking on that. Sell to employees. Like we are investing so much, the co-founders and then the executive management, in hiring and recruiting the top-notch engineers and top-notch leaders in our company. And I think that we are very lucky to have a lot of people that thinks like owners. And that is one of the best things that we took to our decks approaching to the round. That it's not about 2 co-founders or the founding team. It's a lot bigger than that. We are building a company where people think like owners. They care about this company and they care about succeeding. So this is the mentality that we want to create in our company, and I think that this is a great tip. Choose a winning team and always do hiring and always be highly involved in recruiting.
Amazing. I want to just react to your first point, that at Climate First, we always say that we don't invest in science projects, right? It has to be, apart from the impact, there has to be an attractive business case and a valid business case in order to enable a business to grow and then be able to make a significant impact in the world, as both of you are doing. So a last sentence, because I'm getting the signals, but in hindsight, would you do this all over again and build an Energytech company in one sentence?
To be honest?
Only honesty.
So.
It's not a bima here, it's Herzog.
Yeah. So definitely, as mentioned before, it's challenging journey, tough, roller coaster, all the things that you already know. But definitely I don't know what to do else. It's like my life mission. And definitely I would see myself doing that in order to deliver at the end. And the resilience that I mentioned before, it's also part of the story. To never quit, do it. Of course, you need to find the balance, and you are not blind. And if you have signals that are not going to give you any clarity for growth, so you need to quit. But at the end of the day, yes, the answer is yes.
Ido?
Yeah, so it's highly, the answer is a complex one, because I'm from the cyber industry in the army, and when I look right and left and I see all my colleagues at the army doing a turnaround of 12 and 24 months from inception to M&A, it's highly challenging. But if you have the conviction that you are doing something that is really big and really impactful in the world, and the pain that you are tackling is an immense one. So I would do it again. But you have to have a real conviction of the problem that you are tackling.
Amazing. Thank you so much for joining us here today.
Thank you.
And hopefully we'll leave the audience with some optimism towards the rest of 2024. Thank you.